This video isn't for people who want fairy tale. This video will tell you about Canada's growth, Canada's real GDP, what's happening with real estate, and everything to know about the economy. So, what just happened? Canada just lost 65,500 jobs in August 2025, which is a second straight month of decline for jobs. Unemployment jumped to 7.1 years, which is highest in the last 9 years. In Ontario itself, the jobless rate is sitting at 7.7%. Job losses were concentrated in services like IT and tech, transportation, warehousing, and manufacturing, and it had lost about 67,000 jobs. The only real offset came from construction industry with 17,000 jobs added, and permanent worker wages were up by 3.6%. But not every city in Ontario had equal unemployment. Cities like Guelph and Peterborough had unemployment of about 3 to 4%, whereas Toronto was sitting at a staggering 8.9%. But that's not the worst. Windsor Sarnia had 11.1% unemployment. And the result of this, the loonie slid again. Bank of Canada is expected to reduce their interest rates by a quarter basis points on September 17th. Policy rate today is sitting at 2.75%, whereas prime rate is at 4.95%. Bank of Canada has been reducing their interest rates significantly, but job losses are not helping. In July 2025, the Bank of Canada flagged a GDP contraction and output gap of zero point 0.5 negative to minus 1.5. And now, growth in the back half of 2025 barely 1% according to their models. And the bottom line is that the Bank of Canada is boxed in. Slow growth, sticky inflation, and pressure to ease. Now let's talk about GDP. Are we actually shrinking? Q2 GDP shrank by negative 0.4% after growing was just 0.5% in Q1. Export collapsed under tariffs and international investments also froze. July and August are also reading similar data which are not out yet. Now, are we headed into recession? Technically, recession means two consistent negative quarters of GDP would take you into recession. And we've already got one quarter of negative growth, and July and August point towards a weak economy as well. Now, looking at the survey from Bloomberg and Reuters, growth just 1 to 1.4% in 2025, with multiple economists warning Canada is already in a shallow recession. Nanos and Bank of Canada surveys say 64 to 66% of Canadians expect a recession within a year. OECD projected in June 1% growth in 2025 and 1.1% growth in 2026. And my call on this, we are going to be in a recession about 45 to 60% probability within the next 12 months. Again, that's not a guarantee, but that's what the stats and the numbers say. Now let's talk about impact on the housing market. If Bank of Canada chooses to reduce interest rates by 25 basis points to 50 basis points on September 17th, then it will definitely help variable mortgage holders and HELOC holders. However, fixed rates are still dependent on bond yields. Mortgage delinquencies remain low at the moment. However, they're rising very fast in provinces like Ontario and BC. On the non-mortgage side, delinquencies are happening, and they are happening on auto loans and credit card debts. And looking at sales prices now, average price of a home in Canada is around $672,000 as of July 2025, which is a modest 0.6% gain year over year. Now, let's talk about buyers who are out there in the market looking to buy a new home or an investment property. Things are tight. Mortgage wages haven't gone up enough that you can afford a mortgage at a higher interest rate. However, some sellers are seriously underwater right now who are out there in the market trying to sell their property and get access to some cash. This is opening up opportunity for buyers to go in and negotiate heavily. Let's talk about sellers. We currently have over 5 months of inventory in most of the markets in Ontario, and that means that buyers have more options compared to your property. So if you do not choose to negotiate or come down to the market price, likely you are going to sit on the market and increase the days on the market for your property. Now let's look at the macro outlook for the next 2 years. By OECD prediction in June, we would have 1% growth in 2025 and 1.1% growth in 2026. By Bank of Canada in July, we would have around 1% growth in 2025 and 1% growth in 2026. By IMF, 2025 we would have around 1 to 1.5% sluggish growth and similar 1.5% in 2026. Now you might ask, when will this end? It ends when these three conditions are aligned. Tariff uncertainty fades and export stabilizes. Renewal shock passes and delinquencies plateau, jobs stop deteriorating, and unemployment goes down. So, what do you do now if you are a buyer out there in the market? Make sure you have at least 6 months of emergency funds saved up. You have certainty about the location, and you are sure that you are not going to get laid off. Now, if you are a seller in this market, make sure you adjust your price to the expectation of the market in order to move your house quickly and easily. If you are a seller and your home hasn't sold in 30 days on the market, you definitely need to look at your pricing and the condition of your home. Now, let's talk about investors. If you are an investor out there in the market trying to buy a property, make sure the rents that you assume are much lower than the market rents at the moment because we're seeing a huge decline in the rents in the market right now. The numbers, they don't care about your feeling. Jobs are being lost, GDP is shrinking, and immigration is down. This all boils down to a weak economy.